value from success, growth in discovery. Golden Arrow Resources is a well-funded gold-copper exploration company with proven management and prospective properties in Chile, Argentina, and Paraguay. Golden Arrow trades on the Toronto Venture Exchange, symbol GRG, on Frankfurt, symbol G6A, and the OTCQB, symbol GARWF. For more information, visit us at goldenarrowresources.com or call Sean at 778-686-0135.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is David Skarica, founder of the Addicted to Profits newsletter online at addictedtoprofits.net. He also writes for the Financial Intelligence Report. He's speaking to us from the beautiful Bahamas. Welcome back to the show, David.
Good. Thanks for having me.
David, gold gained $30 just a few minutes ago. Is gold back on the way up?
Well, look, right now we're in a consolidation. And if you go look at them, I think this is a longer-term bull market. You can argue it started in 2016 because gold and the gold stocks actually bottomed in the fourth quarter of 2015. So you argue we're 5 years into it, and the first few years, they were kind of moderate. And then we finally moved significantly higher last year, and now we're consolidating. But if you go look at the last long-term move, which was really 2000 to 2011, there were lots of 6, 9, 12-month corrections and consolidations like this, and then the market would move higher. And I think in a way it's more positive, like longer term, because at first I thought, well, maybe this is like 2003, if you go 2009. Those were 2 years where gold only had like these little 1 or 2 month consolidations and pullbacks, and then moved to new highs. But that ultimately led to kind of a top, and then one of these 6 to 12 month consolidations. But now it looks like we're in this kind of 6 to 9 month consolidation. Maybe that means the next move, kind of like 2004 to 2006 was, and the whatnot. It means that we're going to see a nice 1 or 2 year move coming out of this consolidation, because I think the longer the consolidation, the more likely the next move will be quite large,
Is silver going to enjoy the same success as gold, or is it going to be kept artificially down?
No, I think silver has outperformed gold in the last year, and the ratio is still pretty historically high, with gold at say 1900 and silver at 25. We're talking 70, 80 to 1. I think the average historically is like 60 to 1, and then it'll get to usually to 30 or 40 to 1 at tops. And then it was over 100 to 1. I don't think that was actually suppression. It was just silver being more volatile and a little less liquid. A smaller market just got hit harder during the sell-off last year. So, yeah, I think that silver will do actually outperform, because I believe in that historical kind of ratio. So if over the next 3 to 5 years, as hopefully gold moves higher, silver gets down to the upper end of its range against gold, or I guess lower end of the gold to silver ratio, which means silver outperforms, you get down to 30 to 1. So that means silver goes up 2x, against gold. So that, like, for argument's sake, let's just say gold doubled roughly to 4,000 an ounce. That could mean silver goes up, 4 times to 100 an ounce. So I do think that it will move, kind of higher. I believe less in the manipulation the silver market do, and if you are going to believe in that manipulation, probably it's more prevalent in the gold market, because, I do think that central banks and the whatnot, or the powers that be, that don't like gold moving up significantly higher, because, or alternative assets, because, then people look at that and maybe these assets are kind of a psychological indication that the system is not doing well. And, so there could be some shenanigans that go on there. Even Yellen's talking about, like Bitcoin and money laundering, right? Even though we know that major banks all around the world money launder and have helped fund, drug organizations and whatnot, right? So now all of a sudden it's the Bitcoin's fault, right? So I do think that you see trying to attempt to suppress these things because they feel that, as long as the stock market's going up and blah, 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 people are just going to be happy. And by the way, I think that's what will add fuel to the fire in the next gold thing, because I do believe we are in an epic stock market bubble. And, it has gone way, way higher and further than I ever imagined. But like everything is stocks as a percentage of GDP, which I've talked in the past, price to sales, price to earnings, every single indicator is actually almost at like the highest level ever. And the only other two comparable time frames were 1929 and the 99-2000 tech bubble. So we really are. This is really an epic bubble. This is 1929. This is 2000. This is the tulip mania. The South Sea bubble, etc. This is all of these Mississippi scheme. This is all of these. Like, it's going to be fascinating to watch it play out, and because I do believe it's not going to end well, and we're getting kind of late in the game. Like, I don't know if it will happen over the second half of this year, or first half, or maybe early next year, but definitely I think we got 12 to 18 months left, and this is going to end really, really badly.
We'll have more with David Skarica right after this.
Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Welcome back. We're speaking with David Skarica. David, the new U.S. government, how's that going to affect the markets?
Well, I think this kind of feeds into this bubble synopsis that I've kind of come up with. Actually, for Financial Intelligence Report, my article for February, I've never really promoted that on the show, but it's only $99 a month. There's a lot of other good writers for the report, or $99 a year, sorry. So, $8 a month. So anyone who's kind of interested, it's on moneynews.com or newsmax.com. So and just so you know, all they do is pay me for the articles. Like, so I don't get any subscription fee or anything, sales fee. It's just that it's somewhere you can read some of my work. And I think this article is worth getting it for. So there's a great book by John Kenneth Galbraith called Short History of Financial Euphoria. And he talks about like those old bubbles I just mentioned, the South Sea bubble, the Mississippi scheme, the tulip mania. And then he also talks about the 2987 crashes. And one thing that he notes, and you could add the 2007 crash to this, even early 2000s, that usually these crashes happen under Republican administrations because people who are Republicans tend to be more pro-free market, tend to invest in the markets more, tend to believe in the uniqueness and greatness of America. So they get caught up in the euphoria, thinking this huge boom is going to continue, and then, and they think, and they also believe the policies that the Republicans are bringing, which usually less taxes, less regulation, are feeding the boom, and that's why it's going to go on forever. And then some event happens, and everything gets too leveraged, and the market crashes. But I think now it's actually the opposite. I think it's these young millennials who are mostly Democrats and mostly liberals causing it. Part of the reason is a lot of the companies that they believe in, the Zooms, the Estes, obviously the big names, the Netflixes, the Amazons, etc., have benefited from the pandemic and people having to stay at home and buy things online. And, they're also coming to and then also I've talked about in the past, them using their inflated unemployment checks, their stimulus checks, etc., to kind of speculate in these companies. And now with the Democrats taking everything over, these people also believe in, kind of government spending and all of this thing. So they're going to believe that these things are going to cause more prosperity or everything to continue to boom. And I think there was a recent poll in the Wall Street Journal which showed that, like 3/4 of Republicans think everything's going to crash, and like 80% of Democrats think everything's going to boom now. So I think that these people get, in terms of politics, get caught up with their own party and believe this sort of thing. And then also, what's happening now is baby boomers are actually starting to sell their stocks, and have been since the first decline last year in March, April, because, they're retiring. Like, my dad's a baby boomer. He's turning 68 this year. And, he's at some point going to retire in the next couple of years. So he would start lightening up in his stock portfolio, for example. And most of the baby boomers that age will. And the millennials are now getting to the point where they are, getting to the speculative years. So I think them believing in all these kind of, the stimulus, all the companies that are the boom companies, etc., are causing them to drive the bubble, and just kind of like during the go-go generation, and and then in the 20s, and my generation was a bit like that in the 90s, because we were the first generation that kind of had the internet growing up, and a lot of Gen Xers were driving kind of the tech bubble. I think now they're driving this bubble, and it's a mixture of everything. The technology, now I think the politics is on their side, etc. And what I can kind of foresee happening is when this stimulus kind of all ends, probably sometime in the second half of this year, by then we'll either probably have a combination of, vaccine, being mass distributed, and kind of herd immunity to COVID. So the economy is going to open it up, and I don't think the economy is going to be nearly as good. Things aren't just going to go back to normal. And when that happens, and then the market kind of looks around and says, well, there's not going to be any more stimulus anytime soon, and the economy is still pretty crappy, that, that's when you kind of see this bubble being pricked and the reality setting in. And like I said, this is going to be really fascinating to see, because with these price to sales, price to GDP, etc., everything being at such extreme, almost like, for example, market cap to GDP in the States right now is 180%. It was only 150% of the dot-com bubble, which is the previous all-time high. And after that bubble, the market dropped roughly 50% on the S&P and almost 80% on the NASDAQ in the next 2 years. So I think we're really going to enter this kind of massive bust, and it's kind of the millennials driving it. And again, for once, it's not kind of maybe these Republicans and their beliefs driving the bubbles. It's actually these kind of liberal millennials. And also one thing it's really unique to millennials is, and I'm sorry if you are a millennial and you're going to find this insulting, they don't know shit about history. They're one of the most ignorant generations I've ever seen in my life. And they don't even remember the housing crisis 12 years ago, the dot-com crisis 20 years ago. After the 29 crash, a lot of people would not speculate in stocks for a generation, because the images of the crash and the ensuing depression, were kind of in their memory, and that following generation or two were very frugal. And what's amazing to me is that this just happened 20 years ago in the dot-com. These parabolic blow-offs and this kind of bubble in new technologies. The housing crash only happened, 12, 13 years ago. And these kids are now speculating in these stocks within such recent memory. I guess maybe a TikTok video is only 20 seconds. So that's like how long their memories last. But that's another thing that makes this really aspect, is that, okay, all bubbles repeat themselves because people, to a certain extent, don't have, historical knowledge. They have that, it's different this time mentality. But I've never seen it where we've just, in our third bubble in 20 years. I think this is, actually, that's unprecedented historically. Maybe it's because of all the liquidity and money being printed, but I think that, that's going to make it interesting as well, because, I think someone in my generation, I'm a Gen Xer, I'm in my early to mid-40s, where the market starts dropping, we'll be like, oh no, this is like 2008, or this is like 2000, 2001 again, where the millennials, they've never seen anything like this. And I think that little mini crash that happened last year actually has made people more emboldened, because it's like, the market went down 30, 35%, came right back out and shot up to new highs, because the Fed will come in, they'll print trillions of dollars, they'll do stimulus, they'll do MMT, all these things. So, and that's the last thing, just to get off the millennials that are driving the bubble with Biden, is I think if you go look at the administration, this isn't really, I have a lot of conservative friends, and every time the Democrats win the election, they'll call they're communists. But Clinton was pretty well a centrist. Obama even was, I'd say, slightly center left, and not nearly, as left as some people portray them. And I think that this administration, even though Biden historically has been a centrist, their policies are way, way further out there than Clinton or Obama. And I think they know they probably only have 2 years with the majority in the Congress and Senate to do what they want to do. So I see them really being aggressive with their agenda. And, I don't know how much they can pass because it's going to be tough, but, they got to get every single vote they have in the House. Every single vote they have in the Senate to pass everything. But I just think their agenda is way, way to the extreme. And they're probably going to use MMT, the modern monetary theory of basically monetizing all the debt as a way to pay for this, which, I'm not worried really about the bond vigilantes, interest rates going higher and, that causing a crash. I'm more worried about just a destruction of the currency because they're going to use this modern monetary theory to essentially just fund the deficit.
What do you see happening with the U.S. dollar?
Well, here's the thing. All countries are a basket case right now financially. Like, in Canada actually had the biggest deficit as a percent of GDP of any of the G7 countries. But I think what Canada did is they were a little more honest about it. They kind of put most of that deficit in year one, where the U.S. used a lot of accounting gimmicks and moved a lot of the spending into the 2021 fiscal year. So, partly because their fiscal year, starts in October, November. So, the U.S. will easily be the biggest this year. So, everyone's kind of a basket case. Everyone's spending money. Everyone's trying to do stimulus. The European Central Bank talked about doing yield control today, which means that they're going to buy the long end to keep those long end yields down, right? So, the government's going to stay solvent. But I think the U.S., if you go look at the type of stimulus that they're doing and everything that they're doing, from a social fabric kind of, we've always considered the U.S. to be more conservative, than Europe, Western Europe or Canada. But even what they're doing in that regard, everything, they're kind of, the analogy I make is, you ever watch the movie Spaceballs when, they go to light speed and then Rick Moranis, tells them to go to ludicrous speed and then they end up jumping way over, the other ship because they're going so much faster. It's almost what the U.S. is doing, like their fiscal deficit, their money printing, the social agenda is actually going way further than what's going on in Western Europe or Canada. So in terms of the dollar, because they are being so aggressive printing money and running these huge deficits, probably much larger on a relative basis compared to their economy this year and next year, I think that will cause the dollar to continue to kind of erode going forward. And also, if you look at it as a foreign investor, okay, maybe you don't mind buying some U.S. bonds to support some infrastructure buying, some short-term measures to prop up the economy. But if they get into this kind of more extreme agenda, I think foreign investors will really shy away because they'll be like, I'm not investing my money in this country for this type of, agenda. So I think, the U.S. dollar is definitely going to roll over here. And, I would say by the end of this decade, it will be in danger of losing the reserve currency status. And again, because all currencies are kind of crappy right now because everyone's putting money and spending money, I don't know what would take over. I can't just see the yuan taking over. I can't see the euro taking over, but I could see a mixture, with the U.S. dollar being part of that mixture of maybe 4 currencies making up a basket of something that's, 4 currencies or even in gold even included in that as well. Because I really think that this is the end game in terms of people talk about, central banks coming into, or the U.S., the Federal Reserve being created in 1913 and, in 1971 getting off the gold-backed currency. I really believe that this is kind of the end game for these kind of pure fiat-type currencies.
We'll have more with David Skarica right after this.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlin, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway.
Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with David Skarica. David, President Biden plans to cancel the XL pipeline, the Keystone XL pipeline. What does that mean for energy?
Well, there's two things on that. Number one, the whole thing with the Paris Accord and climate change, whether you believe in climate change or not, the whole thing is a waste of time, in my opinion, because China and India are not going to sign off. So as long as, China is now the biggest polluter in the world. And by the way, carbon emissions in the United States are down 7% in the last 4 years. That's with, Trump and the big boom in fracking. So, they're actually declining anyhow on their own, right? Because some of it's more efficiency, some of it is, you're seeing this move to electric vehicles and other form of energies, and a lot of power plants are just being converted to things coal, to things like natural gas, which are actually a much cleaner way of burning fossil fuels. So anyhow, but with the pipeline, it's just very difficult. But first of all, I think that's a warning sign for the entire energy sector in the States. And a lot of guys who just are, fracking down there, you're going to get a lot more environmental regulations. And that's the way I think they'll stop a lot of the energy production, is by just making it very red tape and expensive to do, kind of like the Canadian government's done to Alberta. But it's really bad for Alberta because now that oil is landlocked again, and they have to sell it at a discount. It's heavy oil to begin with. And they have to sell it at a discount because, they have to get it out of there, right? And the way to move it, say, via rail or via, trucks is it's okay. Like, anyone who buys it will sell it at, a further 10%, 20% discount. So I think the only thing that might help it in the longer term is I kind of see the U.S. oil industry maybe going a bit by the wayside with the current administration, and that could help Canadian oil because they'll need to import a bit more, and even without a pipeline, again, via rail, via trucks, it will, it's easier still to import some oil from Canada than it is in tankers from Saudi Arabia, right? So,
and the Trans Mountain Pipeline is being built as well. It's owned by the Canadian government, so it's going to go through.
So I do think. So I think it's a negative, but I don't think it's gonna totally ruin the industry. I think it's just a warning to Canada. Everyone was on Trump's case saying, when he would put tariffs on aluminum or this and that, and I just think it's the U.S. is basically the declining superpower, and they're going to be insular, and they're going to do everything in their own interest. So you can't really totally just be dependent on them. I think actually any country, other than the Bahamas, which is totally dependent on the U.S. for tourism, right now, when you've got this kind of declining superpower, you actually have to diversify your economy away from them, be it towards Asia, Europe, etc., because I don't think you want to be just totally dependent on them in the coming years,
David, what about the phenomena with Bitcoin? Is this going to last, and will other cryptocurrencies manage to nose in?
I think you got to be worried now because Yellen's comments, and I think a lot of the crypto people are very arrogant, and they think they can never go down. And I think it's a reflection of the stock market bubble. In 2017, when the market got frothy, Bitcoin blew off, and then if you go look at it, 2018, the market went down 20% in the U.S., and Bitcoin busted, and then eventually went down 80% from that 2017 high, that January 2018 high. So I think that first of all, the proof will be in the pudding. Once the market does crack at some point, I think Bitcoin is going to fall with it. And I said this in the last podcast. What do you think? The guy who's super conservative, buying gold and silver, is he really buying Bitcoin, or is it the guy speculating in Tesla, speculating in this Bitcoin? I think it's more like the latter, right? So, and then they just use that, it's a store of value, right, as kind of that excuse. It's like it's so I think they use that as an excuse, and then, that's why it's going to go higher. So I think, number one, it's going to crack with the bubble. I think, number two, you're going to see government-based cryptocurrencies, like with central banks behind them, to make it easier for transactions, moving money around. If you get all these government-based cryptos, all of a sudden your bank accounts would essentially become like a crypto wallet, and I can send my money to your money, and it can auto-convert to your currency, which is going to be way easier than SWIFT numbers and all these things, and your routing numbers, like when you send a wire now, right? So I think that is going to kind of replace it, and they're going to really try to crack down on these things. And like we've seen in the media vilifying certain elements of society right now, they'll vilify crypto. Like, Yellen said it's for money laundering, right? So they'll just come up with all these examples. Some crypto guy, whatever, paid, some illegal arms company $100 million or something. I'm just making something up, but it's like that. You'll see those kind of reports, and you're going to see it. And they'll say it's for, tax evasion and money laundering and all this stuff too. So I think you have to really watch it. I don't think anything is too, it can avoid a lot of this, government regulation in the end. Remember, the stock market was like that in the 20s. There was virtually no rules in the 20s. They had these, groups that would manipulate stock prices. Joe Kennedy was actually part of those groups, and it was a totally unregulated market, and a lot of the players in it they thought that was just the total bastion of free market capitalism, and they thought it would never be regulated. So I think crypto's the same way. Yeah, and I think actually if I do like coins, it's stuff that's real asset backs. Like some guys I know are trying to make a coin backed by natural resource properties, and or a coin obviously backed by gold or anything, real estate, oil and gas. I think that is what's going to work better because you have real assets backing it up. Like the one thing I'm always suspicious of Bitcoin too is just saying, there's a limited number, available. Who cares if there's a limited number? So what is this thing really worth? It's the one thing about gold, there actually is a limited supply ever been produced, right? And gold has usages. It's used in electronics, etc., right? So I think the problem I have is just kind of inventing an arbitrary number and saying, this thing is worth, it's only worth what people kind of think it's worth. And recently there was a big power outage in Pakistan, that lasted days, and it's like, well, what good did Bitcoin do you then when your power was out and your internet was out? Where if you did have to run around in the dark, and barter for some food, probably someone would take a gold coin, but they weren't going to take a Bitcoin.
David, thank you so much for chatting with us.
Yeah, thanks for having me.
My guest has been David Skarica, founder of the Addicted to Profits newsletter online at addictedtoprofits.net. He also writes for the Financial Intelligence Report, which we talked about briefly. And, of course, you can explore the websites that's on. Where can people find it?
It's either moneynews.com or newsmax.com. The Money News is kind of the financial arm of Newsmax. It doesn't really have much to do with Newsmax itself. So it would definitely be on moneynews.com.
David was speaking to us from the Bahamas. If you have any questions for David or any of our other guests, you can send them to info@howstreet.com. Find us on Twitter @HowStreet. Our YouTube channel is Talk Digital Network. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.